Good morning, everyone.
Good morning.
We are about to begin today's webinar. So before we get started, I have a few housekeeping notes to make. 大家早上好，欢迎参与今天的线上研讨会。在我们开始之前，我有几个要点和大家通知一下哈。First, this webinar provides English-Chinese simultaneous interpretation. On your screen at the panel at the bottom, you will be able to see the interpretation icon. Note that by default, interpretation is off. Click the icon to select the language you would like to hear. In Chinese channel, you will hear the translated audio. 首先，此次的线上研讨会提供了英汉同声传译。您可以在位于屏幕底部的翻译图标中选择您要使用的语言。请注意，翻译功能的默认设定是关闭的。Second, if you have any questions to ask the speaker, you may type your question in the Q&A chat box in your Zoom control panel. Thank you very much for your attention. 其次，如果您有任何问题要提问主讲人，您可以在 Zoom 的问答框中键入您的问题。谢谢您的关注。Okay. Good morning, ladies and gentlemen. On behalf of the CABA-UTAR Webinar Working Committee, I would like to extend a very warm welcome to all of you to our inaugural CABA-UTAR Webinar Series. The CABA-UTAR Webinar Series is jointly organized by the China ASEAN Business Association, CABA, and University Tunku Abdul Rahman, UTAR, as an effort to promote a better understanding of the global economic situation and to foster closer economic and socio-cultural cooperation between China and ASEAN, especially in the post-COVID-19 era. We are indeed very honored to have with us today Seri and Sheng as the first speaker for the webinar series. The sessions will be moderated by Datuk Seri Mohamed Iqbal. To begin with, I would like to invite the advisors of CABA, Seri Dr. Ko Sukun, to deliver his opening remarks. Seri Ko, please.
Thank you. Good morning. As an advisor of China ASEAN Business Association, or CABA, I would like to welcome all of you on behalf of CABA President Tan Sri Lim Gek Tong, who is presently recuperating from an eye surgery. Joining us this morning are CABA Deputy President Datuk Sri Iqbal, who will be the moderator, the President of UTAR, University Tunku Abdul Rahman, Professor Yu Hong Tat, and the Vice Chancellor of Wawasan Open University, WOU, or WOW, Professor Lily Chan. Founded in year 2017, CABA has organized more than 10 events to promote trade, tourism, and business, as well as social cultural understanding between ASEAN and China. CABA would like to thank UTAR for cooperating with CABA in organizing this CABA-UTAR webinar series. Well done, Professor Cheng Yi, UTAR's Director of the Institute of Management and Leadership Development, who is the chairperson of the working committee and her members. Dear friends, as many of you may be aware, during the first quarter of this year, 2020, ASEAN became China's largest trading partner for the first time, surpassing both the European Union and the United States. This is indeed highly significant. However, moving forward in the COVID-19 and post-COVID-19 eras, there are many challenges and issues of major concern and worry. Tan Sri Andrew Sheng is indeed the most suitable person to give an overview of these issues and enlighten us. We are very glad and grateful that he has kindly accepted our invitation to give this inaugural lecture to kickstart the CABA-UTAR webinar series. Now, Datuk Sri Iqbal, as the moderator, will introduce Tan Sri Andrew and the topic. Over to you, Iqbal.
Thank you very much, Tan Sri Ko. That was a beautiful welcome note. And we are very, very glad to see that two universities are actually following this webinar in addition to the targeted audience that we have been looking at. Welcome to all of you. And I would just like to record that we also have following us in this webinar, the Secretary General of CABA, Mr. Lim Chu Tek, this morning. Good morning and welcome to the inaugural lecture initiated under the CABA-UTAR webinar series. I'm very happy to be given the honor to be the moderator. Thank you very much, CABA and Tan Sri Ko. My task is relatively an easy one. I want to keep it short and focused on two aspects because we have an eminent speaker and therefore the prime time should be given to the speaker. First, the topic, which is post-COVID economy. Thoughts on what China and ASEAN can learn from each other. As Tan Sri Ko Sukun mentioned, the relationship in trade and other areas, related areas, has been impressive even before the post-COVID and now more significant during the COVID period between ASEAN and China. Now, I don't want to elaborate much on COVID-19, but I just want to mention that it is a household word for the globe. Everybody in the world is talking about this coronavirus or COVID-19. And I just want to use two words. One is scarred, when you have a patch of paddy field and that is hard drought, the whole thing is scarred. And the other word that I want to use is scary. Now the whole of the world economy is scarred. I think this is the essence of the speech Tan Sri Andrew Sheng is going to speak. Scared, everybody is worried whether I will be infected and whether my infection in my body will be passed on to somebody else. So the COVID impact on the economy and societies all over the world is unprecedented. And it is ongoing. There is no end in sight. We are not sure when there is going to be an end. China, to be precise, Wuhan and the Hubei province was the first epicenter. The World Health Organization declared this as a pandemic for the whole world. And after 6 months of continuous events that are unfolding, there is no light on the tunnel, so to speak, and the situation and the circumstances from the experts in the field whose knowledge and wisdom is required. So when I say the knowledge and wisdom is required, we have to look at people who are conversant with this phenomena and also the impact on the economy. That brings me to the second, the aspect of my moderation introduction, that is the speaker, Tan Sri Andrew Sheng, whom you will be able to see on the screens. For the international participants following this program, I would like to say what is the word Tan Sri means. It denotes a title, one of the highest awards given in Malaysia to an individual for meritorious and distinguished service to the nation. that significance alone is enough to introduce Tan Sri Andrew Sheng, and I will say you are introduced and therefore you can go on with the lecture. But his credentials are vast and varied, spanning not only Malaysia, but United States, Hong Kong, and China. And those who know Malaysian scene, know that Tan Sri Andrew Sheng was a central banker, very distinguished central banker. He was then handpicked for service in the World Bank, a prominent institution looking at the economic development of the whole world. He plays the role of advisor to the China Banking and Regulatory Commission, and many more. I can go on, but that is not my objective, just to give a brief introduction to Tan Sri Andrew Sheng. The most important thing is that he combines his professional skills and valuable and rich experiences by taking up teaching appointments. Now that is why we draw him into this CABA-UTAR webinar series. And he is a visiting professor at Tsinghua University, Beijing, University of Malaysia, just to mention two universities he's associated with. It was this unique combination that prompted the Time magazine to name him as one of the 100 most influential people in the world. That alone is a tale to be told, because he, with his thinking and the ability to articulate his thinking for the betterment of the world, and therefore he is very eminently qualified to give this lecture, inaugural lecture. Without further ado, I present to you Tan Sri Andrew Sheng, who is now based in Penang. And I would like to add, it is the Pearl of the Orient, and he picked up that as an important, and those of you who are watching it, please visit Penang. Tan Sri Andrew Sheng, you are now invited to deliver the inaugural lecture. Welcome him.
Thank you very much, Datuk Iqbal. Good morning, everyone. Because there is simultaneous translation, I will speak only in English. I think that was an excellent introduction by Tan Sri Kotsukun and yourself, Datuk Iqbal. ASEAN and China, are very important trading partners. And that, stems from very long historical ties. And we are going through a very complicated situation. So when Tan Sri Ko asked me to talk about the subject, I thought that it is really very, very, very difficult, because nobody's an expert on a pandemic that was last experienced 100 years ago in the Spanish flu of 1918. And we're going through this every day, but I will try. I think there are many important lessons to go through, but what I will try to do is to go from the big picture down to more specifics. And I think it's very important for us to understand the background. So let me, start with my presentation and take you, on a very quick journey on what I think is happening. Now, the key point is that we are going through the worst pandemic for 100 years. There are now 8.4 million people infected around the world, with 450,000 deaths, 2.1 million people infected in America alone, with 120,000 deaths. We are now in the world's biggest, deepest depression since the 1930s. And we are unlikely to have a V-shaped recovery, because there are all signs that a second wave is already happening, as was what has happened with the Xinfandi in Beijing. Now, different countries have different controls over this. And China has managed it very, very well. So has the rest of ASEAN. But you notice that the Latin America is now the epicenter, and America is still going through a very difficult period. So we must be prepared for a 2 to 3 years of slow growth. I'll explain why. Now, East Asia has been the first to hit and first to recover. But recover to what? And that's the issue that we really need to think about, very, very carefully. If we recover back to the old model, it may no longer be viable. So the big lesson that I want to share with you today is that we need a very different mindset to think about how we can recover and then rebuild the post-COVID economy and society. And because, China and ASEAN complement each other so well, China has a very large market, very old history. Relations with ASEAN is very old. ASEAN is a $2.5 trillion economy, very young, very growing. It has 600 million population, and culturally extremely diverse. So the complementarity between ASEAN and China is very natural from a geographical, from a stage of development point of view, complementary. And how we commit to each other through open, peaceful trade, especially the digital transition, is the way to go. So now, let me very quickly run through this. You all know this very well. I am not going to speak on the medical or the health issue because I'm not an expert on that. But it is very clear, until a vaccine is found, we are going to go through a very difficult period for the next 18 months. Because the earliest a vaccine can be found and disseminated, and is not clear how much will it cost for such vaccine to be made available. So the US is very much affected, and already today's news is that the deaths may hit about 130 to 150,000 by the end of July, and if they reach for 2020 alone 245,000. Now that's on the outer edge of the calculations, but that would be equivalent to as many people dying in the Second World War, and it has happened in the US in 1 year. Now that means that social distancing, which is the solution that the Chinese, put in straight away, lock down very fast, test, trace, and contain. This is the big lesson, and wear masks, wash hands, all this But we can't stop the virus spreading now. So the emerging markets, which have high population density, such as India, Brazil, etc., are now beginning to feel, the effects. And so the second wave, in my personal view, is almost unavoidable. So how do we deal with this? None of us have any experience with dealing with this issue. How bad is the damage? Well, in my view, and I think this is agreed by a lot of experts, such as the OECD, which did this calculation, is that by 2020, the recession is unavoidable. The key question is whether this recession will worsen to a depression, which means that several years, not just 1 year, but several years worldwide recession, and it's very likely to be very low growth, slow to recover, but no inflation for the moment. Now, how fast are things changing? The IMF in April said that China will still grow, US will decline by 5.9%, the world will decline by 3%, and will recover by 5.8%. But the World Bank said, well, the world economy is fragile, and this is, slightly after April. and we need to handle with care. But if you look at their numbers, they don't think it will be that bad. The calculations are more modest. By June, the OECD has presented two scenarios. The first one, if nothing happens, that means we carry on as before with no second wave, the US will decline 7.3%. If there's a second wave, the US will decline 8.5%. And in China, of course, a little bit better, and may even be positive growth, but still possible losses. EU will be worse. It will be hit 9.1% decline or 11.5%. So, as I said, the studies by McKinsey, I'm bringing a lot of material for you to share with you how the different experts look at this situation. They think that the earliest recovery is the second quarter of next year, and probably sometime in the third quarter, 23. So if you think through this, China, will have a decline, but it will begin to recover, whereas the US will still be in a bad position. Unemployment is very, very bad. But the OECD I beg your pardon, the Bank for International Settlements, which is the central bank of central banks, in April already said that the spillover effects of this global decline is very serious. The emerging markets, of which ASEAN is, and to some extent, China is, because it's a very large trader, will also be hurt extremely badly. Now, what we need to appreciate is that in the past, when the world economy grew 1%, trade would grow faster. What we have now seen is in the last couple of years, because of the trade disputes, GDP may be growing 1%, world trade is now growing less than 1%. So if you now look at what the WTO, which is the World Trade Organization, they are looking at declines in trade of 13 to 32%. And that is far, far worse than the 2008-2009 crisis. So this is a huge issue. And the World Bank has said that not only the emerging market trade is in trouble, finance is in trouble. Why is finance in trouble? Because most of the trade finance is engaged in US dollars. The US dollar is the most important currency, reserve currency that almost everybody uses. And during the crisis, when the crisis started in March, the Fed had to step in to provide large amount of dollars because of huge dollar shortages, and has engaged in swaps with different countries. And when you don't have dollars available, you can't do the trade, and therefore trade will slow down. Now, the trade will slow down also if the order book falls, as China discovered when it reopened in April. But the big problem with the economic solution or the medical solution to the pandemic is that you have to have a lockdown. That means you need to stop the actual human movement. As the famous saying, the virus does not move. It is the human beings that move. And the human beings carry the virus with it. But unfortunately, the whole trade business is all about people movement. So you stop the planes moving, you stop the trains, you stop the ships, you stop even the interstate and intercity. The business that are hurt are mostly the small businesses. So if you really look at the service sector, the closure of the service sector drives the collapse in the output. And this is the OECD data. So what is the biggest issue? The biggest issue is the huge job losses. You've now seen them in the United States. US unemployment is 40 million and still rising. Now, it doesn't show up so much in Europe because Europe has an excellent unemployment benefit scheme. But in emerging markets, this lockdown could affect 2.7 billion workers, or 81% of the world workforce. This is huge, and unemployment is unprecedented. It is very likely that the US will have 14% unemployment which is unprecedented and will not be able to solve this. It will not decline below 10% until maybe 2 years later. How has the world solved this? Well, the latest numbers produced by McKinsey, which is literally fresh off the press, showed that G20, that is a group of 20, the 20 leading countries in the world, the fiscal deficit is running at $10 trillion, okay? That's 11% of GDP, already unprecedented again. Nobody has run that so fast, right? And cumulatively, the deficits until 2022, when the governments keep on need to borrow money in order to solve some of the problems, could be as much as $30 trillion. How much is $30 trillion, by the way? The global economy, in rough terms, is $90 trillion. 90 trillion. So you're talking about an increase of 1/3 world debt by 2023. That's huge by any standards. Now, how have the central banks, tried to deal with this? The answer, if you really look at the balance sheet of the major central banks, the total assets, the red line is the United States. This is unheard of because I'm a former central banker. I worked in Bank Negara, then I worked at the World Bank, then I worked at Hong Kong Monetary Authority, right? Let me go back again. That growth, if you really look at it, was 4 trillion in as late as December 30th, 2019. In 6 months, it is now not 6.5 trillion, it's $7 trillion, right? That's 3 trillion alone. How big is the big 5 central banks alone? As large as the total size of the insurance companies in the world. This is unheard of because previous to 2007, central bank books were not more than $5 trillion. And now it's 30 trillion, 6 times, right? And will it grow more? So because what has happened is that, the rich countries, they need money, they bring the money back from the emerging markets. So the emerging markets are facing massive capital outflows and the exchange rates that depreciated. Everybody's taken the shock, except perhaps the renminbi, which has only moved very, very slightly. Now, the poverty levels are huge. UNCTAD has think that, that we may need $2.5 trillion to rescue the emerging markets, right? Including debt relief, additional liquidity, et cetera, et cetera. But if we don't provide the jobs, if trade collapses, poverty will rise, so will protests, and then there may be food shortages, water shortages, et cetera. Now let me step back. We have a very strange situation. Because of the central bank pumping a lot of money, the stock market is only 5-10% from its peak. So why is the stock market doing so well when the real economy is doing so badly? And the answer is the central banks have printed the money is going into the markets, and everybody is punting it. Now let's look at China. The Chinese numbers, these are produced by the CICC, which is one of the leading investment banks in China, and they show that China is suffering from this. It was the first to be hit in December last year. It was the first to come out of the lockdown. It was the first to open up. But once it opened up, the domestic production started recovering, but the international order book fell away. But there's one common trait at the moment. The domestic retail trade has declined, but because of the gradual opening up, it's beginning to recover. But production has been recovering, particularly in the medical supplies sector. But because China is the key hub of the Asian global supply chain, Asian supply chains are all hit by COVID. So if you look at the PMI, which is a production manufacturing index, you see this sharp collapse in 2020, okay? And in almost every single country, right? In almost every single country, and Singapore, because of its a hub, seems to, suffer quite a lot. But The good news is, as the global supply chain, because of the trade conflict between the US and China, production has begun to move, out of China towards ASEAN. So ASEAN has been the major winner from the global supply chain shift out of China. Now, let me explain this. It's not wholly due to the trade conflict. It is also due to the fact that the Chinese are moving up the value-added chain, and the lower wage production, when wages in China are rising, they are also beginning to shift their production to other markets. And so if you really look at see what has happened, countries that benefit from import substitution by the US and China, Malaysia, Japan, Thailand, all these, Philippines, will all be beneficiaries. And if the product relocation away from China, ASEAN countries like Vietnam, Singapore, etc., would all benefit. So how should we look at the way we tackle this crisis? And I think the way to think about this is to look at the China government work report in April 2020, which I thought, there is a lot of noise explaining, as you know, the US-China tension is very, 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 very serious. The media is now becoming very black and white, right? But if you look at the China government report, it's a very people-oriented report. It basically said, you must not only look after health, which is controlling the pandemic, improving the medical services, but you must also look after livelihood. So it is what the Chinese call 以人为本, right? Use people to improve everything. So it is a system that goes for health, for jobs, for pension, for green living, and trying to deal with inclusivity. Now, they do this basically by promoting domestic consumption, bolstering agricultural production, including cropland and reforestation, reduce the corporate burden, but push Internet Plus. Now, this is the area where the whole of ASEAN, I have not seen a single ASEAN country not doing this. Everything that the Chinese have said, the ASEAN country programs, in fact, actually come up with the similar ideas, which is very pragmatic, very people-oriented, recognizing that the old system is probably broken and we may need to rethink this. So, but what China has done is to say it will continue to open up, it will fulfill its China-US Phase 1 trade agreement, focus on high-quality joint Belt and Road projects, which is exactly what ASEAN is very, very interested in, because that helps the infrastructure and the trade aspects, and then also establish new free trade zones such as Hainan Island. Now, let me go through the fundamental challenges and where we need really serious rethinking. First of all, the old model was on a 90% economy, speed, scale, and scope. Everybody said efficiency is the most important thing, first best is everything, therefore you go for speed, you go for scale, and you give as many products as possible. The COVID showed everything comes to a stop. When it reopens, suddenly we discover we are no longer a 90 to 95% economy. You cannot run on that scale. If your restaurants, will have social distancing of at least 2 meters, which means that a restaurant that can carry 100 persons probably will have only 60 persons. An aircraft that can take 300 persons probably can only take 200, right? So we are now moving in what I call a 60 to 70% economy. When that scale declines, costs will rise, and the system you provide, the services that you provide, is going to be very, very different. Because even if you open up, suddenly there could be another lockdown. Now, remember this. I have been having very serious discussions with some of the top epidemiologists on the world, some of the top experts on water, food, infrastructure, and finance, thinking what is the post-COVID world look like? And the answer is the climate change is leading to probably more pandemics coming. You just don't know when it's going to come. There could be more natural disasters, right? Now, I don't want to paint a completely negative picture because, human beings have always been able to adapt. But this time round, the climate change, as things become warmer, it becomes colder at the same time. The variations become wider. So we now need to be more nimble, more adaptable, right? And more online. Now, when we come down to innovation, governments cannot innovate because in the sense that who discovers the new business processes, the new jobs, it has to be business. It is the business that responds to these challenges that create the innovation and change. But this innovation and change must be supported by government. It can't be said only the market will work. If we allow the market to work, the latest vaccine drug that comes out could cost $500 per shot, US, right? Or maybe more, because they want to make money from it because they discovered the vaccine. But we want it to be available to everybody, which means that the price needs to come down. So the market cannot work completely. But the reality is that 90% of workers around the world are not prepared for this digital shift, which means that during the 12 to 18 months, maybe 2 years or later, the government must not only subsidize the cost of the transition, but also must help train the people to move to the digital age, because the businesses cannot do that on their own. So what this means in the 60 to 70% economy is that the government must be willing to experiment, to delegate to local authorities, especially at the city level, and be prepared to fund interim losses and costs. And this is going to be very a long period of 18 months to 24 months. But those who reform fastest will win. Those who are slow will lose. Now, let me come back to the finance issue. We have a very strange situation, as I said, in which the finance, plays a very important role, but we don't quite understand it. And the real reason is that the dollar is a very important part of America's leadership in the world. The dollar accounts for 60% of global transactions, 60% of the foreign exchange reserves. The US dollar market share of both the bond market and the equity market is 40%. The US economy is only 20-25% of the world economy, right? So the dollar plays a very big share. And EU is not doing that well, is growing flat. So the euro hasn't done that well. And the reason why the US has been very strong is because investing in US dollar assets from a return on equity, ROE basis, has been much stronger than everywhere else. But going forward, if the US economy is going to be hurt, the ROE will be hurt also, particularly if interest rate is zero. So actually, the post-COVID economy is all about competition in terms of ROE. If East Asia, that means China plus ASEAN plus South Korea plus Japan, ASEAN plus 3, grows well, the money will come back to East Asia. But we must deliver very strong real economy, very strong financial markets, and that takes a lot of reforms. So very quickly, this table shows you very important numbers, how the global equity market went into peak and now is slightly off peak because of the central bank support. But Asia is fundamentally a banking system, and bankers are risk adverse and they're not so quick to reform. And so we really need equity-based funding to help us shift to the new world. And that's something that the Chinese are working on. And I think in ASEAN, different countries are thinking through the system. So where's the opportunity? The opportunity is that as China begins to reform in its equity market, the world is aging. The rich economies of Europe, US, UK, Australia, etc., are aging. So is Japan, right? So they will need to put money in the growth economies. Where will they put the money? The answer is going to be China, India, because the huge population areas, and in my view, ASEAN. This table was produced by a friend of mine who is an expert in this area, but I think ASEAN has been missed from this report. But ASEAN plus China, India, the young population, huge markets, you know, Asia is 55% of the world economy, growing in GDP terms, growing in savings terms, so huge opportunities. And how will they do this? Through fintech. That means through technology. So I have painted a very tough picture. The world is very much under threat because of the pandemic. But there is hope, because in my view, East Asia, China, ASEAN +3 is definitely the world growth zone. India is also the world growth zone, fastest growing economy. So to a large extent, we live in a very strong area, hurt by global trade and pandemic. But if we manage it and reform well, we will be the first to recover. And the reason is we still have the most modern infrastructure. We have a very young and well-trained labor force. Our leaders are still open to trade, technology, and innovation. We are still frugal. We are prudent, and we have high savings. And as China, India, and ASEAN move towards domestic consumption, we will create our own momentum for growth, and we will then attract also the trade with the regions outside. So first to recover, first to reform will be the winner. This is a time for partnership for all, and that's why CABA, China ASEAN, Business, Association is so critical. It is all about a private-public partnership, particularly a regional partnership, to overcome the challenges before us. So on that note, I know I've given a lot of information. Let's spend the next few minutes, on questions and answers. Thank you very much indeed.
Thank you very much, Tan Sri Andrew Sheng. That was a very illuminative presentation of the post-COVID scenario that we have to take into consideration, and how we can revive not only the global economy, but our own regional and domestic economy. And in my introduction to the topic and introducing Tan Sri Andrew Sheng, I did use two words. One is scarred. The economy is scarred, and Tan Sri Andrew Sheng has given us very clear sort of presentations and diagrams which confirms the sort of an impact this COVID has created right across the globe without any exception. Maybe some countries have got certain low infection rates, but the economy still is scarred. And I also use the word people are scared, and you have taken us through the entire presentation by giving us the facts and figures, which has given a very clear picture of the current situations and how we in Asia, with two big economies, China and India, and ASEAN playing the third role, would be able to benefit from this. Those people who are following this lecture would be able to ask us a few questions. Before I go into that, I have got a couple of observations or maybe pointers for Tan Sri Andrew Sheng to further elaborate on some of these things. One of the key areas that I think is that in your lectures, you have mentioned about the impact of trade, the COVID's impact on trade, and then the second one on the financial aspects. And although it is a health problem, but its impact on trade and finance is very, very significant. And you also talked about the supply chain disruptions. And in the case of China, you did mention about the agricultural sector and how they are giving importance to the agricultural sector. But this is not very much clear in many of the ASEAN economies and about these food security issues. Would you care to comment something on that, Tan Sri?
Yes, let me talk about trade. I think here's the good news and the bad news. The good news from the bad news is that because the US already started its trade protectionism, the trade conflicts for 2 to 3 years already, global trade has gone sideways. And so to a large extent, that prepared most of us in the East Asia region, including in ASEAN, to prepare for more volatility and to build up our cash reserves and don't go into debt. So when the shock came, it is very painful. There's no doubt about you. And a lot of us are scared. I don't dispute this. But we were better prepared. If we rose much higher, we would fall much faster. We went through this, volatility period. And so psychologically, we were already prepared for some bad things happening. And sure enough, the pandemic worsened everything. So why do I want to repeat the word trade first? Most of the ASEAN economies are relatively small economies. We are very trade-oriented. The reason we are trade-oriented is the more we open up to trade, the faster we get new resources, new ideas, new investments, right? So the trade is the only way for small economies to get out of their domestic trap. Because there's only so much your domestic economy can grow up to a certain amount. So trade is very, very important. And trade is because of comparative advantage. And it's proven to be win-win for all. So never forget the importance of trade. If trade collapses, as what happened during the 1930s because of protectionism, the world will get into an even worse situation. And that's why I'm very worried, particularly about America. If America continues to become more inward-looking and decides to decouple, not just with China, but with the rest of the world, right? It's a trend that, as you know, just before the Second World War, American people felt very strongly that they should not interfere in Europe, and they wanted to be isolationists, right? And of course, it was Pearl Harbor that changed, all that. So to a large extent, if America becomes, and America is the leading economy in the world, becomes isolationist, or it begins to put tariffs on quite a lot of issues, then the world trade will go down further, the global economic environment will worsen. The good news, of course, is Europe is still very trade-oriented, and India and the rest of the world are still, for multilateral trade. But there are always tensions. So trade is a very critical part of this. But trade is also related to finance. In 2008, I was there, right? Working on this issue. When the trade happened, the European banks, which were the major suppliers of trade finance, cut their lines. And they cut the lines by 15%, and trade finance lost by 15%, trade declined by 10 to 12%. And so we had to go back to Basel Committee and tell them, push us, saying, what the hell are you doing? The more cautious you are about trade finance, This 2008 crisis was all about subprime, about derivatives, nothing to do with trade finance. If you cut the trade finance, all of us will die. And luckily, the Basel Committee changed their views and then released this. And then the ASEAN banks, the Singapore banks, the Hong Kong banks, various banks stepped up and started providing dollars. And American banks also came into this business to compensate for the retreat in trade finance of the European banks, and then trade revived. Okay, so trade and finance is very critical in this. Now, when you talk about the GVC, the global supply chain disruption, this is absolutely right. But the global trade finance, the global supply chain disruption already occurred with the US-China dispute at two levels. We discovered it was not just a dispute over tariffs, it was a dispute over technology, nationalism, and therefore, if you sanction certain companies, like this is what happened with certain Chinese companies, right? Then companies would have to choose, do I continue to supply the Chinese companies, or do I move the production to somebody else? And if I move it to, let's say, ASEAN, would ASEAN continue to supply these components to the Chinese companies, right? The first part is a substitution effect. You can move the production out of China into ASEAN, but ASEAN needs to supply this to China because China is one of the biggest markets in the world. So all these raises huge disruptions. And for the last 2 years, every member of the global supply chain has been scratching their head, how do we deal with this, right? But in reality, not everybody can move out of China. And the reason is that China is one of the largest markets, domestic markets in the world. When the US-China trade dispute occurred, somebody had to remind somebody in Washington that the US business selling products made in China for the China market is more than the American exports from America to China. And so, you cannot kill a golden goose without, huge damage to yourself. So the supply chain issue is now become emotional because there's nationalism in this, right? And we understand this, but your question was about food, water, supply chain issues. I totally agree. I think people need to think about the old supply chain, realizing that you cannot 100% depend upon all your food from one country. That doesn't work because for some reason, one, the trade is disrupted. Two, the other country, gets into a crisis for whatever reason. Your own national security on food is cut.
Yeah.
So diversification is very clearly the game. And in my view, diversification into ASEAN is the right way to go.
Correct.
Because ASEAN is a neutral zone. People forget this. The whole purpose of ASEAN was to have peace and a zone of stability.
And prosperity.
Right? And you do not want to choose sides in this area. So the whole idea is politically neutral and just trade so that we all have a chance to improve our people's health and livelihood.
And wealth.
Right?
Yeah.
And wealth. Right?
Yeah.
The wealth will come once we have.
Once we have got that. Thank you, Tan Sri. There are a couple of questions that has come from people who are following online. And a very interesting question that has come is this RCEP, Regional Comprehensive Economic Partnership, which was initial some time back by ASEAN plus, supposed to be by 6, including India, but India did not initiate. And then the ASEAN heads of government and the other partners have said that by the end of this year, this should be signed. Now, while this is expected to be good for the things that you have mentioned about trade and increasing the prosperity of this region, what will be the prospects after this pandemic impact, because it was not envisaged during the negotiations and the initialing of this RCEP. What are your thoughts on this, Tan Sri?
Well, I think RCEP is clearly the way to go. And RCEP was always there behind the scenes, but it did not reach political momentum until the Americans wanted a TPP, the Trans-Pacific Partnership, excluding China, right? And then nobody expected that the biggest promoter of TPP pull out at the last minute, right? And so everybody then said, whoops, maybe we should go back to our RCEP, right? Now, think about this. The whole issue of RCEP, as you know, is to try and promote the trade and gradually bring the tariffs down, but also improve through the BRI, the infrastructure, physical infrastructure, that will lower the cost of trade itself. Okay? And we totally understand different economies with different stages of development feel that if they lower their trade barriers, their tariffs too fast, they may be overwhelmed with overseas imports. So that accounts for why India is a little bit cautious over this issue. But let's look at the big picture. You know, in the last 200, 300 years, particularly the rise of Britain and in America, it was about maritime trade. But the BRI not only promotes the maritime trade, but also the rail connectivity, the road connectivity through Euro-Asia.
Yeah.
This will bring back the prosperity of Asian, cross-Asian, pan-Euro-Asia trade that happened with Genghis Khan. I mean, during that period, right?
Yeah.
So, and so if that, you know, occurs, every week there are now more trains moving cargo between Europe and China. But once that's sorted out, including the rail connections between China and ASEAN, there will be more cargo being moved by trains than perhaps even by ships. Not yet, but you know, it's beginning to happen. And that will bring prosperity and stability back to Central Asia, which has, you know, been very closed to global trade, right? And so to a large extent, the RCEP is a concept that focuses initially on the region, but actually has an eye to a more global lowering of trade on a multilateral basis. I do not, you know, I'm not an expert on trade. I cannot, discuss the micro concepts of the issue, but I see the strategic value of it.
Thank you. Following that thought on the RCEP and the sort of promotion on trade, which you have very clearly emphasized, you also mentioned about the supply chain disruptions and how the shifting is taking place, particularly from China to the ASEAN countries. And this is a good trend because, as you rightly said, that ASEAN is a beneficiary of this and it is a welcome one. What should ASEAN as a sort of a collective body should do in order to further promote this idea and ready to receive this sort of an investment without much competition? And if you may, towards the end, talk about Malaysia's own kind of preparedness in order to take advantage of.
Well, I think a lot of trade occurs basically because there are commonalities of interest. And commonality of interest can happen partly by language. Let me put it very simply. If you look at the Chinese online trading platforms, they are excellent in Chinese, but their user friendliness in English is still not quite there yet. Okay? And of course, if you really look at ASEAN, including India, a lot of that transactions international is done in English.
In English, yes.
And if it's not as user-friendly for various reasons, that trade will not happen, right? So to a large extent, each one of us, that means each member of the RCEP, a member of ASEAN, need to think about how do we improve our own citizens' preparedness to go online, and how do we then build the platform so that the online business can continue, can prosper. And as long as people say, well, this is very much a Chinese platform, and I prefer to deal with my own platform, then the trade may not happen as much as before.
Yes.
And then you also have a certain problem, trust, right? As you know, on the online business, there could be a lot of cyber hacks and cyber scam. And we've seen this. So how do we build, this online business with good standards, against, cyber hacking, scams, standards is very critical. This is a conversation that is only just beginning. In my view, there is a huge opportunity because of the pandemic for city level, governments to actually work with their own work suppliers, small businesses, manufacturers, to try and standardize the business so that the people who were not online can move online, right? And as I said, 90% of the workers today are, may be able to know how to use mobile phones or smartphones, but they use it for consumption, not for income earning. Today, if we can work at home, why can't I introduce a system that I can earn from my being online, right? This is a very fundamental problem. And there are huge barriers against this, not just psychological, but actually regulatory, standards, trust issues, etc. The second issue that I want to, this is a very complex subject, but it's something very new that I'm working on, is we need to rethink the 60-70% economy. Why is that? Because we have huge capacity. Previously, we had no capacity, okay? If I am AirAsia, I'm not trying to promote AirAsia, but I'm just saying a budget airline. A budget airline sells its excess capacity at a very low price to reach full capacity. Because after its break-even point, any money, any dollars coming in from the sale of cheap tickets forward makes it more and more profitable. What if you think about this model, what has happened is that everybody now is at the 60% level, but we have 40% excess capacity. How do we monetize that 40% excess capacity is really the key economic question that we face today. So it's not about, so when we talk about uncertainty from the pandemic, it's only the unknown, but if the government and the private sector and citizens work together on how to build the local platforms that will enable us to generate income and jobs, we will succeed. And then, as you know, how does the internet work? The internet works by networking local networks to local networks until the intranet becomes the internet. So to a large extent, we need a very different model to think about how the post-COVID economy should work, right? Now, it goes to show that ideas are possible. It's how do you execute it? That's the tough part.
Good, Tan Sri. We have, in fact, exceeded the time slot of 1 hour. I think we can go on because there are more questions that are coming in, but these questions will lead to a continuation of another lecture. So I think that probably we can conclude this. But before I would make my concluding remarks, on a lighter note, there is one person who have asked this question. It is a very lighter note, maybe not rightly relevant to the topic. He says, I have cash of $1 million US. Should I invest in stock market, which you mentioned that it is going to go up? The economy is not really doing very well while it is low, or put it in the bank? What's your advice?
Well, my advice is very simple. I mean, when I was a securities regulator, my advice was I never talk about the future. And my second answer is that I do not like to advise people to take stocks, to pick stocks, because the chances of me being wrong are extremely high. The real issue is know yourself, right? It's not about knowing the markets, it's actually knowing yourself. Some people are very greedy. They make a little bit of money, and then they put even more money in, and then they lose their pensions, right? What you really need to do before you invest is to think about this. How much can you afford to take risks? If you cannot afford to take risks, right, that means you have a lot of cash flow commitments for your own health, for your own family, right, just to make sure that they can ride through this together. Don't play stocks. But if you have some money to spare and you feel that you want to take some risks, then you have to think about what area do you want to invest in? What do you want to do with it? Do you want to go for value stocks? Do you want to go for speculative stocks? Do you want to go for technology, right? All these are very tough questions. I cannot answer for you. I can only answer for myself. Because if I lose any money, that's my own money, right? All I can tell from a broad perspective is that I live in ASEAN. You know, I do a lot of work in China. I am a strong believer in Asia. I believe that Asia is in a good spot. It does not mean that we will go through even more difficult periods. But if East Asians invest well, governments do well, the stock market should do well. Okay? But I will not get into this. How do you, which stock do you pick?
which I knew that you wouldn't want to delve into that very dangerous area. Thank you very much, Tan Sri Andrew Sheng. And ladies and gentlemen, those who are following it online, this has been a very illuminative and very illustrated inaugural lecture. It speaks very well for the first effort that UTAR and CABA has put up together. And we couldn't have found a better person than yourself, Tan Sri, because of your rich experience, as I said or alluded in my opening remarks, that not only your education background, but your knowledge and also your experiences of having dealt with real life situations puts you into a very fine position in order to explain this relationship. And you struck a very good note on the thoughts on what China and ASEAN can learn from each other. So your concluding remark is very, very precise, that we are in this region, China included. ASEAN is emerging much better with RCEP, including China, Japan, and Korea, together with Australia, New Zealand, and probably India, not to be left out. They will be roped in some ways. Then it can be for the future, post-COVID or otherwise, we would be all well to do with that. Thank you very much. The second one, yeah, thank you very much. This is not a real physical audience, otherwise we'll give you a very high clapping.
Thank you, thank you, thank you. Thank you very much indeed.
Yes, my colleagues around here are really doing a big clap. And Professor Cheng, you are there. We would like to say a very big thank you for coordinating this on behalf of UTAR, and also Wawasan University has come in order to join us into this program. and hope that this inaugural lecture becomes a very successful precedent for us to follow in the series. And I would like to once again thank all my friends in CABA for collaborating in this effort, and for those who are online seeing this and asking so many questions, which will be forwarded to UTAR for them to organize the next webinar. And for me, it has been a pleasure moderating this particular session, and we will see you one more time. Maybe Professor Cheng, you want to have the last word?
Oh, not at all.
I think
Professor Cheng.
Yes.
Carry on.
Thank you very much, Tan Sri and Drushan, for very insightful editor, and Datuk Seri Iqbal for moderating these interesting sessions. Yeah, I thought Datuk Seri Iqbal mentioned just now, it's a series of webinars, so we'll have more to come. So I hope we have more sharings on this, as I said just now, to promote a better understanding on how are we going to deal with this very challenging time. Thank you very much for your attendance today and your participation. Thank you.
Bye-bye.
Thank you. I'm trying to answer some of the questions, just looking at the questions before I sign off.
Thank you, Tan Sri Andrew. It's very, very interesting talk. So many good comments that we have received.
Well, very difficult to answer all the questions, so I don't know how to do it, but maybe just post it if they because I think I don't want to tie up the whole meeting. I'll just answer a lot of these in general terms. Okay.
Wow. Okay. Thank you. Yes.
Thank you.
Hello. Thank you. Bye bye.
Thank you, Darren.
Thank you.